This week, my £100,000 portfolio saw its fair share of ups and downs. Each day seemed to bring a new twist and turn. Despite the volatility, the portfolio ended the week up approximately £950. This brings the total monthly gain to around £3,100. It's a good reminder that short-term fluctuations are normal. Long-term growth is the key. It's important to remember that investing is a marathon, not a sprint. There will be good weeks and bad weeks. The key is to stay focused on your long-term goals and not get too caught up in the day-to-day noise. This week, I received dividend payments from two companies, Altria and GSK. Altria, a tobacco giant, pays a dividend 4 times a year. Their current annual dividend yield is 8.19%. GSK, a pharmaceutical company, pays a quarterly dividend. Their current annual dividend yield is 4.05%. These dividend payments are a passive income stream that helps to grow my portfolio over time. Dividends are a share of a company's profits that are paid out to shareholders. They can provide a steady stream of income, especially in retirement. The stock market has historically trended upwards over the long term. This is due in part to the power of compounding. Compounding is the process of earning interest on your interest. Over time, even small amounts of money can grow significantly. For example, the S&P 500, an index of 500 large-cap US stocks, has returned an average of around 10% per year over the past 30 years. This means that if you had invested £10,000 in the S&P 500 30 years ago, your investment would be worth over £170,000 today. Section 4. Navigating the seasonal ebb and flow of dividends. October is typically a lower-paying month for dividends in my portfolio. This is because many companies pay their dividends on a quarterly or semi-annual basis. However, this doesn't mean that October is a bad month to invest. In fact, lower dividend payouts can sometimes present buying opportunities. When stock prices dip, dividend yields become more attractive. This can be a good time to buy shares in high-quality companies at a discount. Section 5. Reinvesting for future income, ITV, Arbor Realty, Trust Visa and PayPal. I reinvest all of my dividend payments back into the stock market. This allows me to buy more shares and benefit from the power of compounding. Recently, I've added to my positions in ITV, Arbor, Realty Trust, Visa and PayPal. ITV is a British media company that pays a dividend twice a year. Their current annual dividend yield is 5%. Arbor Realty Trust is a real estate investment trust that pays a quarterly dividend. Their current annual dividend yield is 11.48%. Visa is a payments technology company that pays a quarterly dividend. Their current annual dividend yield is 0.75%. PayPal is a digital payments platform that does not currently pay a dividend. However, I believe that the company has strong growth potential and could initiate a dividend in the future. Section 6. Growth stocks versus dividend growth stocks. When constructing a portfolio, it's important to strike a balance between growth stocks and dividend growth stocks. Growth stocks are companies that are expected to grow their earnings at an above-average rate. They typically reinvest their profits back into the business rather than paying dividends. Dividend growth stocks, on the other hand, are companies that have a history of increasing their dividends over time. These companies tend to be more mature and have a track record of profitability. Section 7. Join me on this journey. Remember, this is just a glimpse into my personal investment journey. It's not financial advice, and your investment strategy should align with your own financial goals and risk tolerance. If you'd like to follow along, be sure to like this video and subscribe to the channel for more updates. Let's navigate the world of investing together.